Hello and welcome back. In this next couple videos, we're going to go through um, the exercises that are part of the study guide. Now, hopefully, you guys tried these on your own after watching the lecture portion of the video. Ideally, that would have been great. If not, that's okay. As promised in the study guide, we're going to go over these problems, and I want you to compare the answers that you've got and the calculations you got with what we do here. If you haven't attempted them yet, please pause the video and attempt them, and then come back and we'll walk through everything. Okay, so the first exercise that we have to do from your textbook, it's on page 286. And we have a family-owned company, and they produce handcrafted Balinese musical instruments, okay? And they tell us how much they're sold for, and they give us data, right? They say, hey, here's the units that we produced, 250. Here's the units we sold, 225. They give us the units in ending inventory, 25. That's very important. They give us the variable cost per unit, and they give us the total fixed cost. Okay, so the first thing says, assume that the company uses absorption costing. Compute the unit product cost for one gamelin. Okay, so we're going to use absorption costing, right? So we know right off the bat, what is our unit under absorption costing? What do we have to include as part of our unit product cost under the absorption method? Direct material, direct labor, variable manufacturing overhead, and the per unit fixed MOH. So the first thing we're going to have here is DM for direct material, and we have $100 per unit of direct material that goes into making one gamelin. Next, we have direct labor. Within direct labor, they tell us that we pay $320 per unit. Great. We need our variable MOH. Well, the problem tells us that the variable MOH is $40. Okay? Keep in mind, what are we calculating here? The unit product cost. Selling and administrative expenses never, ever, ever become product costs. I don't care what method we're using, whether it's absorption or variable, guess what? We never include selling and administrative costs. Okay? Now, since we're doing the absorption method, we're going to use our fixed MOH. But we got to put it in a per unit basis. Our total fixed manufacturing overhead is $60,000. We're going to divide that by the number of units produced. Say that again. Number of units produced. We produced 250 of these gamelins. Okay? That means that the per unit basis of our fixed manufacturing overhead is $240. So the unit product cost see, 420, 60, 420, if my math is right. Okay? That's how much they cost under the absorption costing method. Now, for some reason I have absorption costing twice. So under number 2, I'm just going to change this real quick. We have variable costing. What cost do we include as part of our unit product costs under variable? Well, we're going to include the direct material, always, which is $100. We're going to include the direct labor, which they tell us is 320. And we're going to include the variable MOH, which is $40. What about the fixed MOH? We're doing variable costing. Under variable costing, fixed manufacturing overhead is not treated as a product cost. It is treated as a period cost. We expense it when it occurs. We do not include it. So the unit product cost, sorry about that. Give me 1 second. $40 here. Is $460. And I miscalculated, didn't add a right number. So the absorption costing should be $700. Oh, sorry, $700. Under the absorption, it's $700. Under the variable, it is that's embarrassing. Yeah, $460. So the difference between these two costs, the $700 and the $460, is the $240, the fixed manufacturing overhead. Okay? Now let's look at number 2. What number 2 wants us to do is to use the number 2 says that we have to do the income statement. Okay, under the absorption costing, how much fixed manufacturing overhead cost is excluded, or I'm sorry, how much fixed manufacturing overhead is included in the company's inventory at the end of the year. So let's think about it this way, okay? So we have, we produce 250,000 or 250 units times $240, okay? This is our fixed manufacturing overhead. So basically what I did here was I said units produced times the fixed MOH per unit, okay? So if I take $250,000, or I'm sorry, 250 units times the $240, I get $60,000, right? That is my total fixed MOH, okay? They want us to say, okay, how much of your fixed manufacturing overhead, how much of that 60,000 is still on the balance sheet at the end of the year? Well, that's easy, okay? To figure that out, I'm going to say, okay, well, 250 were produced, 250 were produced, 225 were sold, okay, and all I did here was say number produced minus the number sold. That is the number that's sitting on my balance sheet, 25 units, times my fixed manufacturing overhead per unit, $240. I end up with $6,000. So the answer to this question that you would want to put down is this amount right here, the $6,000, okay? I just wanted to show you the calculation above it just for demonstration purposes, to show you that the fixed manufacturing overhead in total is what we incurred during the period, or is what we incurred for producing 250 units. We didn't recognize that, right? How much did we recognize? Well, that's easy. We sold 225 units times the $240 fixed manufacturing overhead per unit, 54,000. So 54,000 was actually recognized, okay? Number 2 says prepare an income statement for last year using variable costing. Explain the difference in the net operating income between the two costing methods. Well, that's easy, okay? So the first thing I'm going to do is I'm going to say, what are my sales? Okay. Well, I know that I sold 225. Oh, come over here and do it. I'm going to calculate my sales as being 225 units times $850. That $850 is the selling price. They told me that in the problem. Okay. If I multiply those together, the 225 times the 850, I get 191,250. Okay. Same net income that I got using the absorption method, right? Now I need to figure out what are my variable costs. Okay. So I need to list all variable costs. So first, I'm going to take my COGS, my cost of goods sold, and I'm going to multiply the number of units that I sold, 225, times my unit cost under the variable method. Well, what is that? I already figured it out. It's 460, right? That was part of number 1. 460. Unit product cost under variable, 460. So I'm going to multiply that by $460. I end up with 103,500. Not done yet. Why? Because I'm doing the variable costing method. I'm using the contribution formatted income statement. I need to subtract out my selling, or I'm sorry, I need to subtract out my variable selling and administrative. Well, that's easy. They tell me in the problem that the variable selling administrative is $20 per unit times the number of units that I sold, 225. That gives me $4,500. So I can now calculate my contribution margin. Well, that's easy. I'm going to take $191,250 in sales and subtract out all my variable costs. I'm going to subtract out my variable cost of goods sold, which is $103,500. And I'm going to subtract out the variable selling and administrative. I end up with $83,250. Okay. I now subtract out my fixed MOH. Why? Because I'm doing the variable income statement. I'm using the contribution formatted income statement. Because I'm doing variable costing, fixed manufacturing overhead is expensed when incurred. And I'm going to subtract out my fixed selling and administrative costs, which are $20,000. So I end up with net operating income of $3,250. This NOI, under the variable method, I'm going to compare with the absorption costing income statement that they gave me in the book. $9,250. There's a $6,000 difference. Why is there a $6,000 difference? Well, because under the absorption method, I still have $6,000 sitting on the balance sheet that I did not recognize the expense for yet because I didn't sell those items. Under the variable costing method, utilizing that contribution formatted income statement, I recognize all my fixed costs, all my fixed manufacturing overhead costs, regardless if I sell those units or not. Because it's variable, I have to recognize all fixed manufacturing overhead. And if you look, the difference between the 3250 and the 9250 is $6,000. That's the amount of fixed MOH that is sitting on the balance sheet under the absorption method. Okay. When we come back, we'll do number 10 and number 11.